All right, all right. How you guys doing? Welcome back. What's going on? Everybody's so happy. Yesterday we got vaccine news. Today we got stimulus news. Yeah, it's the same thing. Same thing with trade wars. Remember that? All that trade war talk? Yeah, we're gonna win the trade war. Trade war, trade war. Yeah. No, that wasn't it. Wait, where was that? Trade. Oh, here. Trade war, buy, 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 trade war. All right, so just standard, you know, um, 1-2 punch, right? You get the vaccine yesterday, and today you get Biden saying that, well, whatever stimulus you pass, it's just the beginning. Which means what? Very simply, it means that you will get a lot more stimulus, a lot more money being pumped into the economy. So it's more of the same. We exchanged one devil for another devil, and the next devil now is going to be, print for the people again. And this one, well, it's not, we didn't spend right the first time. Now we're going to spend differently. It's going to be demand side, and we're going to do this, and we're going to do that, and we're going to tax this guy, and it's the same thing. Um, So for the people that think that supply side economics sucks, you're right. Guess what? You think demand side is better. Wrong. It's just as bad, right? It's that Bernie Sanders, real progressives, fist up in the air. We're going to print for the people, print, print, print. And again, when you look at uh, uh, the profit mechanism right here, right? No matter how you spend the money, it's always going to end up as profit savings, and it's always going to end up in the stock market. Hello, Alessandro. Good evening, my friend. So basically, the market is very excited that there's going to be more printing. Populism at its finest. And that's okay. That's okay. It'll make our job a lot fucking easier, I'll tell you that much. All right, so now, uh, before I go into looking at all the markets and everything, how do we play this? What's going on here? Well, slow down just a moment. The first thing you need to know is that this area right up here now is an area where you would want to short, okay? Because you've been in this 14%, 15% range since going back into, what is that, September, all right? So we've been going through this up and down and up and down and up and down for a very long time. So let it do what it's got to do. Let it break out. So it would look something like this. Let it break out. Nope, that's not what I want. Let it break out. Let it build some kind of consolidation up here. And then from there on, bull, 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 bull. Nothing but bullishness. You just buy the shit out of it. Um, because you're going to be in a wave three. And here's what I mean by that. If you if you count this as a one, this whole thing was a big consolidation, right? And that means all that pressure is going to relieve to the upside. And you're going to the moon. And you just have to wait for that. But we're not there yet. We're not there yet. For now, we have this upper range of this structure right in here, right in there. Okay, one, two, three. Came down, came back up, testing it again. Right now, if it does what it's supposed to do, then this will start to fall apart. Right, and then this structure will correct, and from there, if this does occur, then you're either going to go kaboom There's going to probably be some news that vaccine is only good 3 months, 6 months, a year, I don't know, 2 years, whatever the case may be. People are getting sick, somebody died. You know, you never know with these things. You can't predict the future, but something bad would happen, and then everything starts to fall apart. Um, Alternatively, like I said, if this turns out to be a nice big two, then you take the breakout, and that's it. Just let it go. Let them keep printing. Let them keep bidding price up on themselves. There's alternative ways you can play a bull market like that, and I've shown some of them to my subscribers. There's more ways to do it, so keep that in mind. How about the S&P 500? So S&P 500 is more or less the same story. Wherever this ends up topping out, you're going to have a structure like this. All right, first counter trend move. This would be a 2, then you would get a 3. This would continue to go up, and then we're going to see, is it going to break out or start to fall apart? You don't know these things. Um, for now, anything above the previous high, if it starts to consolidate and you get a nice little high base going, you want to take that shit to the long side. And off to the moon we go. Where's the other one? Small caps. Small caps having some resistance, right? That key area we talked about. Clearly a 1, a 2, and a 3. All right. So let's see how this behaves. You can say again that this is a high base. So the next move higher, right? Off you go. Transportations. Uh, Pulling back a little bit, double topping. Again, if this breaks out, off you go. I would not expect that it would be a very vertical kind of move. This is, I think, over. I think what you would get is something like this, if we're going to go bullish. Something like this. Something more normal, like that. Okay, so it's not going to be a straight up shot. All right. The fangs, they broke incredibly bullish today. Okay. This was a structure, bear structure, broke out, incredibly bullish. Right, you got that overhead resistance area right here in this big wedge. Okay. So now you're waiting for that next move down, or you break out. Breaks out, some kind of structure like this, then boom. You got the next previous high to contend with, all right? But you want some kind of consolidation in here, and then if this takes off to the moon we go. Let's see. Let's start from the top real quick. Equal weighted S&P, nothing happening. Dividend weighted, breaking down still. VIX at the lower end of this whole ordeal, going back to February. New York Stock Exchange is holding up at previous highs. Dow Jones is the same thing, right? It's got to break that 30,000 and then start going towards the top. But you got that resistance right up here, so it's not as clear as the other markets. S&P, we talked about these already. World Stock Market Index continues to push higher. Jets not doing so much so far. China pushing back up. So it had a very big move yesterday, really big down move again yesterday, and then popped back up. Volatility. Skip that one. Emerging markets still holding up against that resistance area. I still think it needs a correction. Emerging markets again, same thing. Japan pushing that rising F flag. Keeps pushing on it. Australia popped back up. Still broken structure. Nifty 50 is holding up. Cosby holding. You could say this is kind of a rising a flag, right? Right there. Let's see. Europe. Europe broke out. That's interesting. That's very interesting. I guess they're going to be stimulating too. Lagarde is going to be sitting there uh, working with the Germans, print, print, print. But nonetheless, this is a breakout, huh? So this right now, I would consider as a buy in Europe. Germany has not broken out yet. Okay, still doing that head test. UK broke down from the rising F flag, nothing there. Popped up. Denmark doing really good, but nothing that's broken out. Banking, I'm sorry, BRICS, they're still holding up. Taiwan, you want to own this one, right? It's broken out, if I'm not mistaken. Yeah. So all the way, it's anything above this trend line in Taiwan is a buy. At some point, it's going to correct. Brazil, breaking out. There you go. Wave 3. It's in a wave 3. Whenever this ends, then we can draw that trend line. Is it going to be up here? Is it going to end up here? I don't know. But we are up against resistance right now. Right there. Okay, breaking out as we speak. Saudi continues to push higher. Oil. Oil has a nice bull flag. Look at that. See it? Nice little bull flag. 1, 2, 3. Look for more upside in oil. That would agree with two things. One, that the dollar is falling, so you need more dollars to buy oil, so oil goes higher. Two, that if this is going to be, forward-looking mechanism bullshit, oil is going to go higher. Right? It's got to go at least 50. So that's what, another 15, 12% from here. Bitcoin. All right, let's talk about Bitcoin. Now, this needs to correct. This whole structure right in here, this thing, at some point needs to correct. It needs to come down a little bit. And then from there, continue on up. All right. So don't be surprised if it pulls back and then you start hearing that same old bullshit. Oh, Bitcoin sucks, blah, blah, blah. Okay. It's got a little bit of a megaphone feel to it because I did expand. Right. It was like this. It broke. Right. So there is an expansion that went on. Definitely hooked. So you got that megaphone thing going. Also, wrong one. Also, we're right up against the resistance area. So it kind of makes sense why you would have a megaphone, right? It's going to start to either correct or it's going to pause, create a high base, and then continue higher. Right? Either way, this structure here needs to correct. This right in here. Whether it be through time, price, whatever the case may be. All right. Ethereum, I'll just talk about them. Getting a lot of requests. It looks like it's in the clear. Litecoin looks like it's in the clear. Ripple in the clear. Gold. All right, here we go. Gold. Bullish flag. Right? And that's what we talked about before. That you'll probably need more of a downside. Okay? Create this bullish flag and then look for upside. All right? It doesn't make sense that gold would be down and the dollar is falling. That doesn't even make sense. So what we need to do is see this trend line broken. And then bullishness that it's going to be. The fear indicator is right up against the support area. This is my fear indicator. Okay. So that's okay. Real estate not doing a whole hell of a lot. Commodities pulling back a little bit. Palladium continues higher. Copper, again, another new high. Another new high. And again, it makes sense with the dollar weakening. You want to see that, go incredibly bullish and maintain it, but at some point it has to correct as well. So you don't need to be chasing that shit, right? This is the trend line. It must hold. The burden of proof is on the bulls, right? Once this starts to correct, then you want to get involved. Base metals uh, continues higher. Beautiful. Agriculture, a little bit of a pullback, but it has broken. Okay, so I expect this one to go higher. This one has completed the 1, 2, 3 down. All right, it's completed it. This is the structure. Let me fill this in. 1, 2, 3. There you go. So you got your compass. Nice big move up. You got your 1, 2, 3 down. This is your compass. Next move, higher. Right. Commodities overall pulling back a little bit. Sugarcane still needs to correct. Corn, let me go back down to a daily. Corn, okay, still needs to correct. Wheat broke, went even further low, made a further low here. At some point right around here, we expect this one to start to bottom out and start heading back up. Steel continues to push higher. Soybeans starting to reverse. And here's the dollar. Kaboom. It even broke the previous low. All right. So now what? Well, it's in a free fall now. Done. Okay. Unless it does something really funky really quickly, um, it's done. Right? It's broken. So now what? Well, obviously the euro is a great buy right now, um, with a very nice defined stop, which is right there. This structure right in here. All right. There it is. All right. It's breaking out. So look for much higher prices in the euro. How about the pound? Right, continues to push higher. It's doing that grindy thing. Grindy is good. Grindy is good, right? And again, this is the previous highs. It is a inverse head and shoulders. At some point, this is just going to explode to the upside, right? And then once this breaks, then you can say that this is likely going to break, and then off we go. Russian ruble, dollar's falling against the ruble, dollar's falling against the CAD. Australian dollar is double topping right now. It's going to work its way through and get done with it. New Zealand is really just fucking bullish as all hell. US dollar is falling against the Mexican peso. Dollar is about to break the yuan, right? Remember this one we talked about yesterday? Bearish structure. And there it is. Okay. There's the index for the euro breaking out. All right. Look at bonds. Yeah, baby. Bonds up. They're selling bonds. Okay. Again. So what's happening now is interest rates are rising. The stock market is rising. That earnings yield is falling. Compression, right? Look at that. First time we have 2.69 in the stock market. So if we take off, what's going to happen? Right? That's going to go to 2.5, 2.25, 2, under 2, right? What are the bonds going to do? They're going to keep rising. At some point, they're going to meet. If this continues, if this is going to be the breakout, then that's the consequence. You're gonna see bonds being sold off, interest rates rising. You're gonna see the stock market earnings yield continue to fall, that's a recipe for a disaster. So we'll see. We'll see. Uh, Earnings will really, really have to pick up quickly. And I think after this lockdown all over the place, you're not going to see that for a while. Okay. All right. What else? All right. So the emerging currency fund, right, continuing to push higher. Banks are starting to stall out. Nothing there. IBB, we're still waiting for this to break out. Okay. We're still waiting for this to break out. Pulling back today. Let it build a little consolidation, but for now, if this breaks, off to the moon you go. All right, so that's biotech. Water, still kind of in this wedgy looking formation. All right, let's look at the fangs. Nice breakout in Apple today. Uh, it's more today than it is yesterday because it closed right back onto the support area. So today is the breakout. So you can actually take Apple to the long side. As long as it remains above this, that's a buy. Amazon didn't break out yet. Microsoft, okay, continues to push a little bit higher. Facebook, boom, straight up today. Netflix, nice bounce. Google, bounce came back in. Nvidia still hasn't bounced. It's broken, but no bounce. Okay. Tesla, kind of stuck there at that 600. All right. Airlines. Did we look at jets? I think we skipped them. Oh, I think we covered them. All right. So let's take a look at the airlines. All right, Delta up against the resistance area. Uh, no follow through on American Airlines. No follow through in Southwest. Alaska consolidating. JetBlue consolidating. Spirit consolidating. Allegiant pushed a little bit more yesterday. It's doing probably better than most. Hawaiian Airlines, nothing there. SkyWest is doing okay, nothing there. Ryanair consolidating. And nice push by EasyJet. And Copa Airlines, nothing. China Eastern Airlines, structure above a structure. All right. So we need to see this one push through. I've added Turkish Airlines to the mix, but this is in lira, so it's a little bit funky, but I'm interested in what this is going to do. Because to me, from a market cap perspective, it's 2 billion. It's so way the fuck undervalued. This is at least 6 to 8 billion dollar market cap company. The problem is that again it's traded in lira, um, so that creates a problem. But you got a very nice, you know, bull structure here. All right, this is going to eventually break out, and they have the most destinations out of any airline. It's geographically positioned very good. They've managed the airline very good. Okay, um, so keep an eye on this one. But even though we cannot buy it, if you're in Europe and you can buy it, if it breaks out, please do so. All right. What about Boeing? Nothing there. Okay. All right. Let's take a look at the southern currencies, South American currencies, and you can see that the Colombian peso is actually appreciating against the dollar. It's starting to break down, and we had that set up there, no? Where I said a few weeks ago look at emerging markets in South America start to strengthen. And here it is. Okay. Uruguay, Brazil, Colombia, Chile, all of them, there are strengthening against the dollar. Okay, so this is the Colombian peso, Uruguay, right? Still hasn't broken, but it's about to. US dollar Brazil, US dollar is falling against the Brazilian. It's following through. Chilean peso is about to start to break down. Nice big head and shoulders. Look for a nice push lower. Peruvian sol is okay. It's not doing so well. Uh, and then the dollar is also falling against the Indian rupee. Okay. Zoom collapsed today. Big 15% drop. All right. Oops. There it is. So if this goes right here, at 400 gives way, Zoom is done. All right. It's going to be done for a while because when you compare with Jets, the trade was you buy Zoom and you short the airlines. To the left. There it is. Okay. So what happened here, actually, let me just bring it up on the other one. Where is it at? No. It's not what I want. Vanilla. All right. There it is. So the trade was, where is it at? That this would give way and this would continue back up. Okay. That was the trade. And now what's happening is the complete opposite. It was doing fine up till yesterday. Okay. And now, as you can see, they're breaking down. Okay. So Zoom is breaking down and Jets are pushing higher. All right. Oops, I gotta get rid of this. All right, there we go. All right, so we had a little bit of a sell-off now. So we had a very tight. Let's kind of go back in time a little bit. Okay. So we had a tight, structure below structure. Then it started to fall apart. Okay. And then what happened? Well, then it took off to the moon. So we had the holiday reversal here. Then we had this structure, broke down, created another structure, broke down. This was supposed to take, start to fall apart. And then in after hours, or right at the close, you had that news that Moderna was going out to file for that emergency vaccine. And then, of course, that took off and never looked back. And then this morning, we got the news from Biden that, hey, whatever stimulus we get, well, that's just garbage. It's just the beginning. We're going to give you even more, right? So then you had this bull structure. So you have the 1, the 2, the 3, and now it's pulling back. Okay? So now this whole entire thing here, is what? So 1, 2, 3 up with a hook. And now we can identify it. as such. Okay, so that's the structure now. Broke out from this one previously. Uh, what it's got to do now is this has to correct at some point. How it behaves when it comes back into structure is going to be key, because if it starts to fall apart, okay, then if you're going to break the top, you'll probably break the bottom. Okay, so the other fact that we didn't get to the top yet is also a bearish setup. All right, and that's bearish from the really big picture, and that's this right in here. Okay, 1, 2, 3. Came up, didn't quite touch the top. If it breaks the top, it might break the bottom. Okay, and then if that happens, we'll look for the next push lower. As always, when you get to these previous highs, these are potential areas of pauses or reversal. Okay, you had one here, you had one here, you had one here, and now what is this going to do? Is this also going to start to reverse? Right? And like I said yesterday, we are in a sideways market with a lot of volatility. So until this proves that it can not only break out, crossing of the line doesn't mean a whole hell of a lot, but it's got to maintain. It's got to build a high base, that compression, and then break out of it. Okay? All right. Any questions? Let me have my coffee, my Greek coffee. All right. So now let's talk a little bit about zombie companies. Problematic. Now, again, we changed one devil for another devil. We went from Trump to Biden. And Biden now is going to do what, right? From what it appears, if he's coming out and saying, well, this is just a start, don't worry about it. We're going to print a lot more. We're going to give it to the people. Ah. Hi, Philip. So you're new. Okay. Um, I'll explain it to you very quickly. Markets move in waves, and you can see them here. Okay, these are waves. Waves have 4 points. The wave begins from the first counter trend move. Okay, so that's this one. This is the first counter trend move, right? This creates wave 1, wave 2, second point, and third point. Okay, and then you get the wave 3 up. Once you get the wave 3 up and it starts to hook over, then you get your fourth point. All right. So you got 1, 2, 3, 4 points. These points, once this hooks over, create a structure. Okay. And that structure is going to resolve in the opposite direction. Okay. It's what I call deking, right? When you're playing soccer, basketball, football, whatever it is, right? You go left, you go right, and then you go left or right, or whatever you want to do. That's a deke. So that's what the market does. If you want to really learn how to read a chart, this is what the market does. Goes up, comes down, goes up, creates a structure, and then does what? The opposite. Everybody gets fucked up. Then you get the 1, 2, 3 down, you get your points, you get the hook, right? Then what happens? Well, the opposite again. There you go. So then what? You get the 1, 2, 3 up, you get your points, you get your structure. What happened? Boom, the opposite. Right? So it's pointing one way, does the opposite. Okay? And then what does it do? Well, in this particular case, it created the biggest structure right here. And you got the 1, 2, 3 again. And that's the whole point of the counting the waves and learning the structures and so forth. Now, typically what happens, Philip, this should resolve to the downside. Okay? In this case, because of the news, it broke up and now it's coming back down. All right? Now, if it holds above it, that's great. You continue higher. If it doesn't, then if you're going to break the top and it comes back into structure, I'm talking about this structure here, usually what happens is if you're going to break the top, this is going to fall apart and break the bottom. Okay? These are rules. These are the rules. And then when you look at it from a bigger perspective, what do you see again? You have a 1, a 2, a 3. Okay? Which way is it going? This way. Which way should it resolve to? This way. Right? It's the same thing in here and here and there. All right? So the fact that it didn't make it all the way to the top, that's problematic. Right? Because it didn't have enough strength, enough power to push all the way to the top. At least not yet. It doesn't mean it's not going to happen by the end of the day. Doesn't mean it doesn't happen tomorrow. But I'm just telling you right now the way it looks. Okay? So that's how markets move. And once you understand how to read it and you train yourself, then you can't help then not see it. Okay? Even when you go in a smaller time frame for today, well, since yesterday to today, what do you see again? 1, 2, 3. Here's the hook. Which way is the structure going? Which way is it likely to resolve? Okay? So that's what you're looking at. All right? I hope that makes a little bit of sense. You can watch previous videos and you can see how it all works. And the point of all this, reading a chart, is you want to identify good risk rewards. And that's the point. You're not going to tell the future. You're not going to, crystal ball and all this bullshit. From just a pure charting perspective, you're going to pick the good risk rewards. So, for example, in this case, if this breaks, okay, then you're looking for a nice trade to the downside. If it goes back up, then you stop. All right? So, risk versus reward is key. That's what you're doing. You're trying to learn how to manage risk. Where should you take your trades? How should you take them? It's not just willy-nilly take a trade wherever you want on the chart based on vague hunches and feelings. All right? Give me 1 second. I'll be right back. We'll talk a little bit about zombie companies. Be right back. All right, I'm sorry. I had to deal with something real quick. All right, so when you get these zombie banks, right, what's going on now all over the entire nation? You have some companies that are cash heavy, they're doing fine, they're growing, they're not growing, but they're doing what they're supposed to do. And then you got the other part of the economy, which is shit, like airlines. They're zombified, right? They're zombies. What does zombie mean? Well, it means that they have so much debt and they are sustained via debt that even if they were to make profits, their only goal is to pay down debt because their liabilities exceed their assets. So even if you were to move to the next, phase of the vaccine and coronavirus and everything, they're going to have that high debt uh, on their balance sheet, and they're not going to be working to maximize profit. And when that happens, right, that's deflationary because you're not trying to grow. You're not trying to create jobs. You're not trying to push the envelope as to what your company can do. And that is a big problem. Okay. So when we're looking at the earnings yield and you're saying, okay, well, things are going to improve. There's going to be a lot more earnings, right? Let's say we go back to January 2020 when it was 4.5, I think. Even if we were to go back to 4.5% earnings yield, okay? Well, when you look at the chart and you're saying, okay, we're going to go back to 4.5, well, where was the stock market back then at 4.5? Okay, and the stock market was all the way down here. This is where 4.5 earnings yield was, and there was a lot less debt in these zombie companies. So you have now increased by 28%, which means that your earnings have to increase accordingly to go back to 4.5. But that doesn't make sense. You can't do it. Because if you're saying that this is going to break out and off to the moon we go, what happens to the earnings yield? Keeps coming down. You see what I'm saying? So even if you how are you going to get to 4.5 up here? It's not a possibility. It's just not going to happen. Again, you had these bad companies already. Now you have more bad companies that are zombified. They're just going to sit there and pay down debt, and you end up with a very bad scenario. And that's the problem. That's the problem with much higher prices, especially at a time when interest rates are rising. So if the interest rates start to rise again, okay, they're going to go where? You're going to sell off bonds and go where? You can't. So you need more QE. You need more QE to come in and buy bonds and push interest rates back down again. So you can make it appetizing for stocks, earning yields to go higher. Okay. So it's not from an if you understand economics and how it applies to investing, and you start looking at these from a perspective of the macroeconomics, man, it's problematic. It kind of boggles the mind. You're sitting here looking at it like, what the fuck? This doesn't make sense. So, again, Biden is at least not going to lie to us and whatever. But from a monetary perspective, if Yellen's going to start printing, trying to create inflation, and then whoever the Fed is going to be, maybe it's going to still be Powell, but he's queuing his ass off. You're not really going to stimulate the economy. The only thing you're going to stimulate is the stock market. And even the stock market has limits, like I just showed you. So Where are we headed with this? I don't know. Honestly, if the stock market goes much higher, okay, fair enough, but you're pushing up against the interest rates. Where are we going with this? What's the deficit going to be next year? 30,000? 1,000. 30 trillion? 32 trillion? So let's take a look and see what's going on over there. I'll bring up the NASDAQ, see what it's doing. Uh, Let me see if I can find it. So here's the Fed's balance sheet. Okay, it's rising. It topped out initially at a 7 point, let's say 2 trillion, and now we're right back up to that 7.2 trillion. Okay, so there's not a whole lot of QE. Let's go to the daily treasury statement. This is as of November 27th. So we ended the year on September 30th at 26.9 trillion, and now we are up to 27.249 trillion. So 80 plus 40, let's say 50 is about 300 trillion, I guess, right? That we've added. Is it 300? Whatever it is, 250, something like that. So there isn't a whole lot of, I mean, that's a lot, okay, but it's not crazy amount uh, that we were expecting thus far. So, you know, they're going to print more. All right. Well, let's see. Let's see. Every time people hear that word, stimulus, every time they hear QE, 120 billion a month, right? They're going to say, "Oh, yeah, now they're going to be forced to go up to 200 billion a month or whatever." You know, I don't know. We're just headed in the wrong direction, in my view. I don't see how you're going to get earnings to rise so quickly with 30 million Americans unemployed, pandemic unemployment insurance. What are you going to do? Keep giving, $600 helicopter money? That's what you're going to have to do, right? Where's the right. This is ages 25 to 54 employment ratio. Look how far away we are from historic levels of prior recessions. We're at 76%. Right. It was catastrophic when it was 78% back in the 90s, and then again it was catastrophic when it was 78.8 in 2004. Right. Then in 2005 it was catastrophic at the bottom at 75. Now we are where at 76. Catastrophic. Right. Let me find the other one. Look at the loans and leases. Okay. On a trajectory basis. So they pumped it up initially to try to get as much money as they could out of it. And we're right on that same trajectory now. We're right back where we started. And I talked about this before, right? You need a lot more loans to be pumped into the economy. And if you can't do that, then you're going to have to you're going to have to print that much more. This is problematic. Right. Percent change from a year ago. It's right back down. Where we were in 2017, 16, 18. right? Flatlined. I mean, it's still growth. It's still 4% growth. Okay, that's great. But if you need people to go out and work, right? You need people to go borrow. This is not going to do it. And that's where we end up with the problem that, remember, that it's um, how much your credit card is plus your paycheck, okay, that equals consumption. If you're not going to borrow, right, let's say this is Amex, right, or Capital One or whatever the fuck you want to call it, right, and this is the dollar. If you're not going to borrow, then how are you going to increase spending? Problematic, right? If your wages are suppressed because of so much unemployment, then how are you going to increase consumption? If you are saving because you're fearful, right? You're not consuming as you did before. You're not going to go to Europe for vacation. You know, maybe you'll go to your nearest lake or some shit. Right? If you're not spending, then who's going to make up for that lack of spending, for that increased savings? Somebody has to. And is it going to be who? Just the government? Look what the last $4 trillion did. Nothing. It did nothing. So, I don't know. I don't know. Very difficult for me to understand all the bullishness in the economy. You know, people are like, yeah, V-shaped recovery. Look, it's all going back. How? How is it going back? I don't understand. Whatever. All right, so 3:39. We got 21 minutes left in the trading session. We're trying to see what this is going to do, how this is going to resolve. Take it down to a minute chart. All right. So for right now, and again, if I'm doing an analysis on a minute chart, there's no difference whether it be a monthly, a weekly, a daily, 4 hours, 1 hour, whatever. The analysis is the same. Okay. So you got a thrust down move and uh, a flag formation. Okay. Now, what happens when you start getting these flag formations? Well, what typically happens is they resolve to the downside. When they don't, then you are not in a wave market anymore. You're in a particle market. Okay. So we see here we have a double top, right? The M pattern came down. We're creating that consolidation. This should resolve to the downside, at least test the previous high. Then that would be a 1, 2, 3. Okay. And then if it holds, then you will start to look for more upside. If it doesn't and it breaks, then you want another consolidation that looks something similar to this, and then the whole structure breaks. Okay. This is a perfect example of a fuckery move that occurred yesterday. Now this is common when you're doing minute charts. Some piece of news comes out, fucks everything up, off it goes to the moon, and it went into a particle market. Right? You see it? Particle. There's no waves here. It's just a straight shot to the moon. Same thing here. Right? So that's the difference between a wave market and a particle market. Look at that. 1, 2, 3. Going sideways. What should this have done? Resolve to the downside. What did it do? Go back up. Fuckery. This is not a wave market. All right. So when you see it up close, Then when you zoom out and you take a look at everything, then you can see the wave market. All right, let's do the point of control for today since the open. It's right there. So we opened up at 9:30. Point of control is all the way at the top here. See it? All the way at the top, right there. So we're below the point of control. So we're looking again for a downside move here. Point of control is where the most amount of volume went off. It is said to be the point at which fair value equilibrium between buyers and sellers resides. All right. Trying to break down again. Let's see if it works this time. Again, it's the last 2 minutes that kind of fucks everything up. This has been going on now for months. Last two minutes of the trading days starts taking off or collapsing, and you're like, what the fuck just happened? Everything goes nuts. Another point, Philip, if you're still around. Uh, just because you can chart something doesn't mean you trade it. For example, this particular setup now, you wouldn't take this to the short side because it's still within the structure. And as long as it remains within the structure, the bias is to the upside. So there's not enough reward here, okay, versus the amount of risk you would take. All right? But you do want to be aware of the structures when you're reading them, okay? This one would have been a nice, if the news didn't break out, this would have been a nice risk reward to take. Okay, because this could have came all the way down towards the bottom, either here or here. Right. So if it pops back in, okay, I'll take this much risk, but I'm going for this much reward. There it is. Hi, Jacob. I'm going short AMD tomorrow. Well, why you want to trade AMD? Let's take a look at it. Uh, I don't see the short. See, to me, I don't see the problem with AMD is that it's the only one that's a competitor to Nvidia and to Intel, right? It's almost like you need to have AMD around, so the other ones don't look like monopolies. So I've always been bullish on AMD, but at certain levels, and some of those levels is when it's down like 90%, and everybody thinks it's going to blow up. But you literally have no structure, no reason to short AMD. If I read your post correctly, there's nothing here. It's a straight shot, tight move. You take a look at the sector. It's up 5,804%. But how do you short that? I don't know. That's on a monthly. Yeah? If I go down on a weekly, Little bit of a break here, but nothing there. Maybe double topping on the daily. Right here. Perhaps this double top. I don't know. Maybe you know something I don't, but I wouldn't short this thing. Not, not in a million years, personally. Here's what you could do. Let's see what this says. So if you do AMD versus NVIDIA, fuck. Oh, come on. Let's do it the other way. Where is it at? If you compare NVIDIA to AMD, right? So you see the structure here, right? That's your compass right here. And NVIDIA has been underperforming AMD for a long time now. And then it went into a nice 1, 2, 3 up. Okay, so if this breaks, you want to short NVIDIA and you want to buy AMD. You could do that and see if there's another wave down. Okay. Alternatively, you want to do the opposite if it breaks out. Right? If this breaks out, then you want to buy NVIDIA and short AMD. So this way you don't get crushed. You don't get destroyed. Make sense? But straight up short AMD, I don't know. Again, the only thing I could see is the double top. Take it down to an hourly. Perhaps you get something like this. The range is quite large. 26% range. Oof. Oof. Yeah. Why not? I guess you could, right? Up against this resistance. Short it here. If it breaks above, this is your risk versus your reward. Yeah, all right. From that perspective, that would make sense. All right. So I expanded it, and now the point of control is right where we're at from this morning. So it shifted. It shifted from up here to down here. A lot of volume going off here. Now, typically I tell guys that you should be able to eyeball it. And you see this one today? You could not eyeball this craziness. Today you needed the tool. And let's see what small caps are doing. Weak S&P, same kind of bear flag. Fangs. Come on. Yeah, you see, this is the second time it's broke out, came back into structure. Another rule, Philip, uh, you don't allow price typically to be violated. You can't just draw lines uh, wherever you see it. Uh, you try like sometimes I'll use it as I'll violate some price just to kind of grasp the essence of what it's trying to do. And always ask yourselves these questions, guys. What is it trying to do? How good of a job is it doing? So like the fangs for today try to break out. Well, how good of a job did they do? Well, not very. Okay, because it came back into structure. All right, so that kind of tells you a little bit of something. So if you were, unless you have a defined structure like this one with a hook, okay, uh, uh, the trend line cannot violate price. Okay. Guys, don't forget to come down patreon.com/RealMacro. Okay. And subscribe. Don't forget to like the button on the bottom. Uh, I gotta say that stuff. I feel gay saying it. I know. Like and subscribe. But I guess I have to. Whatever. That's what they're telling me to say. So that's what I say. All right. So NASDAQ, see? There you go. Right back up. Particle market. Supposed to resolve to the downside. It's a bear flag. Doesn't get any more clear than that, right? That's what it's supposed to do. It didn't do it. So what kind of market are we in? Particle. All right, 6 minutes left in the trading day. Any more questions? Let me get rid of these. We don't need them anymore. All right. Watch, in the last 2 minutes, this whole thing is going to collapse. And then it's going to end up being a 1, 2, 3. Watch. Uh, I've seen this before. I've seen this movie. Yes, I know how it ends. Rocky wins. At the end of your position on Zoom, wait. Yeah, you got to wait on Zoom. You have to wait until it breaks. Let's take a look at it. But once it breaks, the structure below structure, it's done. Right? So here's Zoom. Huge fucking move today. 15%, I think. And from the top, it's down 17%. Oh, oh. Right? So Zoom now has a structure below structure. All right, so that's the structure. It's a sharp move to the upside. This is what we call it tight, tight, tight. When it's tight, 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 like this, comes down, builds pressure, right? Then you want to take the next move down. Okay? So on a break here at 406, if it breaks below 400, then you want to take this to the downside. But I would be quick about it. You know, take profits fairly quickly. It's already down 17%. I mean, fuck. They fucked up somewhere somehow. And again, I'm not so much in the individual stocks because you got to know so much about them. You see it on a daily. So you're talking about AMD. Yeah, double top. What do you do when you see a double top? You sell a double top, right? Anytime, homie. All right. Let's see what this does. All right. So this is a classic. If it comes back into structure, from failed moves comes fast moves, right? So if this fails here, comes back into structure, then breaks the top, it's going to break the bottom. Alternatively, if this holds, then it's a break test go. All right, it's fairly simple. All right, there it is, trying to sneak its way back into structure. And there's 2 minutes left in the day. Like magic, huh? Correction is coming on 5-minute chart. Which one, AMD? Check up. Yeah, makes sense. Good. Yeah, I agree. There it is. Yeah, looks good to me, man. Indeed. This is your compass. This is your 1, 2, 3, but it's a lot more condensed, right? Pressure. This should resolve to the downside. And then you can stop right above this trend line. Right? Simple. Broken. Structure below structure. Yeah, it's always difficult, when somebody throws out a trade, I don't know what they're looking at. Again, a 5 minute, 1 minute doesn't matter. It's the amount of time that you're analyzing that matters. If the structure exists within the 1 minute, then it doesn't really matter. It can be 15 minutes. If it's the same time frame, same slice of time that you are analyzing, you're going to see pretty much the same. All right, 4 o'clock, that's it. Came back into structure, so now you do an expansion of the structure. So now you have this. Okay. Small time frame, but it doesn't matter. All right, what's that? Indecision. Megaphone. Seen so many of these, right? So that's it. Let's look at the market internals. I held it off today till the end. I think this is going to be better. So let's look at today's price action. Well, what happened? All right, so communications were leading. Financials, information technology was third. Uh, Lagging industrials, energy, consumer staples. Yeah, right. Well, I don't. Not very clear for today. It's all over the place. All right, for the 5 days, it looks really nice. Technology, communication, discretionary incomes is good. Energy, industrial utilities lagging. This looks super. Okay? This looks really good for the 5 days, for the bulls. This is what it's supposed to look like. This is textbook. All right? So that's it for today. Thank you all for coming. I really, really appreciate you guys joining me. Let's see how this is going to work out. Tomorrow, are we going to get that correction from this structure? Are we not? Are we going to go incredibly bullish? We shall see. All right, so for tomorrow, this is what we're looking at. Very steep, 1, 2, 3 up, incredibly bullish. It's holding above the previous structure. All right, so perhaps it's going to consolidate right in here and continue to push higher. All right, that's it. Thank you very much. I'll talk to you guys soon. Bye-bye.